and welcome. You're watching Countdown on Bloomberg went live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. Markets decline for the fifth day in a row. The Nifty recovers almost 100 points from the day's low, and PSU banks aid the recovery. Broader markets also make a comeback. Both the mid-cap and small-cap indices see a recovery of almost 500 points from the lows of the day. Bosch meets street estimates in the third quarter, backed by robust demand from commercial and passenger vehicle segments. And it's expected to be a strong quarter for Tata Motors. JLR margins, however, may decline owing to one-time payment to China dealers.
Okay, thanks a lot for that, Navneet, and viewers. Thanks for joining in on Countdown. My name is Nitasha, and I fear that the market, the recovery that we're seeing, is being sold into once again. So we're not trading at the lowest point of the day, but down about 1%, and the Nifty Bank too, which had recovered quite a bit of lost ground. If you just pull up the Nifty Bank intraday chart, you will see that that too has come off from the levels where it was trying to stabilize. It's now come down and trading almost 400 points lower. So the market breadth is the third chart that I want to show, because the advanced decline ratio was showing signs of converging. It's now again widened a bit, and the market breadth is opening up in favor of the decline. So the last 45 minutes of trade, things have again changed a bit. I don't know if it's got to do with what's happening across the world, because the rest of the global markets, if you just do the WIF function on your terminal, or just see what's happening to global future markets, you will see what I'm talking about. There is a bit of pain across the world as well. Maybe that is feeding into this movement. This is the WIF, and just look at, no, this is WEI. Let's pull it WIF, which is the futures. And the kind of cuts that we've seen, there's a sea of red across the global markets. The European markets flattish, but the Dow futures pointing towards the 150-point downtick that we're seeing in the session. Okay, the Nifty heat map, much better than the start. Remember, the first day really in 2018, very near all 50 stocks in the red. It obviously looking a bit better than before, but look at the cuts that have happened in some of the heavyweights. HDFC is down 4.5. Kotak Bank is down about 2.5. HUL is down about a couple of percentage points. ICICI Bank about 1.5%, and HDFC Bank down about a couple of percentage points. So these are the heavyweights which are putting the index down. It is being combated in a manner of speaking by what's happening to Bharti Airtel, but ITC has disappeared from the list of those top performers. It's now just about 0.5% higher. Bharti Airtel, which was up about 5% at about 1 o'clock, is now just about 3.5 or quarter to 4% higher. So there is some bit of pain that is starting to creep in, and the contributors list will show you that the HDFC twins, maybe ICICI Bank and maybe HUL are amongst the stocks which are putting in pressure. Kotak Bank, excuse me, not HUL really, but the HDFC twins and Kotak Bank right up there when it comes to the top contributors on the losing side. A clutch of mid caps and small caps as well. But before we talk about them, I think it's important to talk about the liquid universe and what's happening in the F&O space. And Navneet, what are you observing?
Well, Neeraj, there was a good rebound that one saw during the session, but as he already highlighted that there is once again some bit of nervousness which has crept into the markets. And remember, the last hour of trade is always important, so let's see where the closing comes about. However, we did rebound from the opening lows. Nifty opened below the mark of 10,600 today, and similar is the case for Bank Nifty. Pull up the volatility index after surging 8% on Friday. Today as well, we've seen sharp surge coming in for India VIX. So it went up, it cooled off, and once again it's inching higher, and currently it's trading above the mark of 16, around 16.2, trading with gains of 6%. Pull up the Nifty PSU banking index. There was a good recovery seen for that index, but I guess that's also off day's high. Now the intraday chart of the Nifty PSU bank will give you a clear picture. A gap down opening, sharp recovery seen during the session, but it's given up its gains in the last 15 to 20 minutes of trade. The premium, I want to pull up the Bank Nifty futures plate and see what's the premium which is being quoted, because during the session the premium had expanded sharply. Remember, on Friday the premium was about 50 points. Today it's almost 100 points. So watch out for Bank Nifty, as there is some bit of build up which is being seen there. In terms of option strike, 10,700 call of Nifty and the 10,600 put of Nifty has seen huge amount of writing in today's session. That's the 10,700 call has added 13 lakh shares so far. In terms of stock futures, I want to highlight two stocks. One of them is is United Breweries. That's doing well in today's session. Reason being, the numbers were pretty good. What surprised the street was the strong volume growth number of almost 12%, which the company highlighted in its press release. It's double the volume growth what the industry is quoting right now. Look at the February futures. There's huge amount of long buildup of almost 22%, and the stock's also gone up on very high volumes on the cash side. The other one is Jain Irrigation. Remember, the counter has been under pressure for the past few days. It snapped the 4-day fall today, trading with gains of 2.6%. Not only that, it's out of the F&O band today. So once again, there is some amount of build-up which is seen for Jain Irrigation February futures. If you look at the open interest build-up currently, it's inched higher by almost 8%.
So some pain points, and they're worsening. Let's get you an important market voice. Ajay Bagga, market expert, joins us right now on the show with his thoughts as well. Ajay, good having you. Thanks so much for joining in. There is a sea of red, I would call it that, even though the headline numbers may show only a % downtick. The market breadth is adverse. Good idea to bottom fish, or you would wait for the dust to settle down a bit, Ajay?
I think wait a week. I'm expecting Thursday, Friday, we should flatten out. We have to let the selling get out of the market, Neeraj. And when shorts get trapped, that's when the market will start turning. So buying still not coming. Buyers are still on strike, not really stepping in. We saw Europe open lower, and our markets followed it downwards, though in the last 2 hours there had been some buying coming in, which was giving some recovery to the market. So let this selling go out. Again, the catalyst will come from the global markets. The budget has got digested. Whatever the government had to do, positive or negative, that's got baked in. It's back to the economy, it's back to corporate earnings, and it's back to the global signal. So we will have to wait for the global sell-off to stabilize. But I'm not very pessimistic. I think within this week itself, you will see the market coming back. So yes, if you have the heart, you can start bottom fishing. I think smarter move will be wait it out Wednesday, Thursday, see the signals, and then you can start. Otherwise, for a longer term investor, even now is a good time to bottom fish. But maybe wait out a week is what I would say.
Ajay, point well taken. We'll be taking cues from the global markets, but the picture looks very gloomy there. The US, the Dow futures are indicating a downtick of almost 100 to 150 points today after seeing a slump of nearly 600 points. The yields have been a concern not only in US but in India as well. In backdrop of all these events, our budget and what's happening in the global markets, do you think it's an overreaction that one has seen on the equities as well as the bond markets?
Well, bond markets are very smart, Navneet. They give you a signal much earlier than the economy. So we really see the bond markets very carefully, even for equity investments. What these markets are really showing is that inflation might come back faster than the central banks like. All the 20 developed market central banks are running a negative real interest rate. So the nominal rates less the CPI for all the big developed economies is a negative print. India is still running about a 1.5% real interest rate positive. So I'm not too fussed about RBI on the 7th. They will make hawkish sounds, but the rate is already too high. Way too high to aid an economic recovery. It will be foolish if they move with a rate hike. I'm not expecting that at all. What the bond market is really saying is that they don't believe the arithmetic of the government. They see further slippage. This move started in December when the government announced a 50,000 crore further borrowing. That they brought down to 20,000 crore. We saw some relief in the bonds. But right now what the bond picture is that the government borrowing program, which they have laid for next year, does not add up, and there seems to be some revenue slippage as well as expenditure enhancement. So the bonds are a little wary. Let's see what the RBI gives the commentary, but I don't see a rate hike. as being justified. We are probably amongst the few big economies which are running a positive real interest rate, and that is hurting the economy quite badly, apart from the biggest borrower, which is the government, which pays nearly a third of its revenues as interest costs right now.
In fact, Ajay, that's been the feedback from majority of the market experts, that government may just not be able to meet the fiscal deficit target that they've laid for FY19 as well of 3.3%. I don't know, probably that's one of the reasons that the bond markets too have turned jittery. But you also said you're adopting a wait and watch approach for this market. If one were to do bottom fishing, where would you do that, Ajay?
I would go for pharma and IT. That has been my call since September. It has worked for IT. I think pharma is also on the cusp of a turnaround. Maybe it takes 6 months more. But really, if you have to go based on valuations, pharma and IT stand out. IT, we analyze also, Navneet, what happens when the yields go up. So the last about 15 times that the yields have gone up historically in the US, the top two sectors that really perform are financials and IT. And we don't have a way to play the financials of the US, but in IT we have a very good way. It plays on the US economy, it plays on the US financials. So that is one sector which gives you, a benefit from rising interest rates in the US. So I would say IT you have to look at. Smart money already moved in December onwards in IT. And even now we are seeing in a down market, IT is largely holding up and we are seeing fresh buying. So IT will be a beneficiary, as well as pharma. Again, I think it's on a turnaround cycle, might take 6 months, but definitely it will come through. Most of the bad news has got baked in and you're getting good pharma companies at good valuations. So those two would be the contrarian calls, bottom fishing calls to really get in. Small cap, mid cap still very highly valued. You need a much bigger correction to really say that this is time to bottom fish.
All right, and pharma, IT are also two sectors which were the underperformers of 2017. Let's see if there is some recovery which is in sight for 2018 or not. Ajay, the other sector which has outperformed in the last 1 year is the NBFC space. Now, if the bond yields remain where they are currently, do you see any sort of correction, because the cost of funds for these companies will go higher?
See, again, what they normally do is they have a clutch of borrowing options, and some of the options are locked in for quite some time in terms of long-term NCDs that have been raised. There is the immediate borrowing, for the less than 1 year period, that will get impacted faster. So it will play out over 3 to 6 months, the higher borrowing cost. But yes, definitely there's a 50-60 points move up in the yield curve. That will have an impact on NBFCs. What will really matter is, are they able to pass on? Even the banks are showing liquidity stress with SBI raising fixed deposit rates last week. And this is the busy season. Normally we do see banks raising interest rates. Last year we didn't see it because of demonetization. 4 lakh crores had come into the banking system and there was a surplus liquidity which RBI was removing through open market operations. Last week the open market operation RBI gave up because the yield went too high, and that is a pattern we have been seeing. There are no buyers for the government bonds, and the yields are too high, and the RBI is saving the banks a deep cut on their treasuries by suspending the open market operations. So right now liquidity is negative, will have an impact on banks, will have an impact on NBFCs, will raise the borrowing costs for borrowers. So I would agree that the kind of valuations NBFCs are enjoying and those don't look justified in a rising interest rate scenario. That's why we have seen a correction as well. There will be a few winners who have locked in longer term funding. I think we'll have to wait and watch and go back to the managements to understand this.
Ajay, the focus will also shift to the monetary policy now. What is the expectation from RBI?
Hawkish, they will decry the government for the fiscal slippage. They will talk about the pay commission rises. If you look at the revenue expenditure of the government, the wage bill has gone through the roof, not very controlled. They'll say, we told you so, inflation is rising, oil price, global economy and global inflation rising. With global interest rates going up, our rates might have to follow. So expect a hawkish policy. The bond market has already reacted in anticipation. They could talk about that we foresee, second half of this year, RBI having to step in with a rate increase to curb inflation. Oil price flow through is not happened into the economy. By keeping it on the marketing and the refiners' balance sheets as well as ONGC's balance sheet. The oil subsidy at 25,000 crores is underfunded by roughly about 11 to 15,000 crores. I think they will mention that. So overall, bank NPAs better. Bankruptcy process still work in progress. We have not seen even one resolution. But work is good, work is laudable. The slippages have probably peaked. Economy has probably bottomed in July. Corporate earnings seem to be on an upswing. The commodity prices are having an issue for input costs for quite a number of sectors. But the pricing power is missing to be able to pass on to investors. So that will be raised. And oil will be raised quite strongly. Oil coming to $67 today for Brent, and Dubai, our cost is somewhere between Brent and NYMEX. So
right.
That will give some amount of legs to us. But hawkish, but no rate hike is what I would say.
All right, Ajay, we'll leave it at that note. Thanks a lot for joining us today and taking us through your views on the markets. Okay, that was Ajay, Bagga market expert, who's expecting a hawkish stance from RBI this time around. And he also said if somebody has to bottom fish, look at sectors like IT as well as pharma. Well, talking about stocks and earnings, Thyrocare Technologies is among the few stocks that are bucking the trend today after a strong third quarter performance. Earnings were also boosted by a 6.8 crore exceptional loss, which was seen in the base quarter. Well, to discuss the numbers in more details, joining us on the show is the CEO of the company, Mr. Velumani. Hi, Mr. Velumani. Good afternoon to you, and thanks a lot.
Good afternoon.
So the numbers definitely look good on year-on-year basis. But if I look at it on a sequential basis, there is a bit of dip which is seen for both your diagnostics as well as the imaging vertical. Any reason for the same?
I think imaging vertical has done well growth-wise. The diagnostic vertical has some challenges. But this year we have focused more on profitability. We didn't aggressively pursue the top line. So I think we just wanted to experiment what happens, and we are happy with whatever has happened.
Okay, sir, could you also tell us what was the kind of volume and the pricing growth that you witnessed during the December quarter?
I think in pricing, if we give some kind of discount and push the top line, the distributors will utilize it effectively. We haven't done it that aggressively as we did last year. We would be still doing some kind of aggressive marketing in the next 45 days to come. So we expect the year to end around 22% year-over-year growth. That is, I think, what we dreamt of, and that is what we are going to do.
And can you sustain the margins over 40%?
I think whenever growth is seen as not adequate, margin is good, and whenever growth is good, margin will be sacrificed. But if you ask me how much margin may be sacrificed for growth, if I want 2% more growth, probably 2% margin I need to sacrifice.
So do you?
So that's a balancing.
But as of now in this quarter, do you feel the need to do that, Dr. Velumani?
It all depends upon, unfortunately, the profitability alone is not the criteria. You need to have growth also. So I think we should be sacrificing this extra 2% EBITDA which we see so far year till date. And we should sacrifice that and produce maybe 2 to 4% of extra growth. So I think that exercise will be done in next 45 days.
The last time that we spoke, which was the beginning of January, you were saying that you believe that volume expansion would be the key going ahead, and you would also derive that by expanding in the states of Uttar Pradesh, Bihar, Odisha, maybe Rajasthan. Is that strategy already underway?
Yeah, we have some advertisements and some aggressive approach in that geography. But whatever we do, the results will take 6 months to come to the hands. So whatever I have said is on way.
Okay. So what you mentioned that you will end FY18 with a revenue growth of about 22%. Let's assume that the margin ballpark is between 38 to 40% for the year annualized. What's the quantum of bottom line growth that one can expect, Dr. Velumani, for FY18?
I think bottom line, you mean EBITDA or PAT?
PAT.
I think we don't have any other thing to disturb the PAT. If you take out 35% of EBITDA, it should be PAT. So there has been a parallel growth of PAT all over the last 10 years of journey. So in fact, we don't look at PAT only because that is almost guaranteed. So we work on EBITDA. So you can calculate that PAT accordingly. Yeah,
but EBITDA grew 34% this quarter. You reckon the EBITDA will grow at 20-22%, or does it have the scope to grow better?
I think the EBITDA, as long as it grows as per the top line growth, and everything will be parallelly growing. I think this year, so far, year till date, EBITDA has grown better than the top line. The next 45 days, we will be correcting it so that both growth is fairly well balanced.
Sir, 22% growth on the top line. Last year, you did something like 300 crores. So we're looking at a figure of 360 to 370 crore for FY18. What about FY19? What sort of growth can one expect from a figure of 360 to 370 then?
I am looking at a better number because of the latest budget. I think the budget has allotted a lot of, at least promised. I don't know how much is going to be done. A fair amount of money for taking care of the health of the common man. So we expect that should give additional 2 to 3% of support. And as such, market is highly disrupted by too many PE players investing into too many diagnostic laboratories. So I wouldn't be promising too high, other than somewhere between 20 and 25% will be the growth, depending upon how aggressive I am or how aggressive the market is.
Okay. Dr. Velumani, we'll leave it at that. Thanks so much for taking the time out and joining us. That's A. Velumani, the CEO of Thyrocare, talking about a 22% growth in the current year. Interesting conversation there. It's a stock that's missed out on delivery a couple of times in the last calendar, but this quarter, the October, November, December quarter, has been a solid quarter, both on the top line as well as on the EBITDA front. Okay, if it was a good quarter for Thyrocare, it was a robust quarter for United Breweries. It's a stock that's bucking the trend after the third quarter numbers came in, I think, better than estimates, registering gains of close to, well, what, 3%. It's come off from the highs of the day, but still an interesting mover, considering that a lot of these liquor stocks were punished heavily on Thursday and Friday. Agam is here to take us through the quarter and also tell us about how does it stack up and its trading pattern vis-a-vis other peers as well, Ajay. Agam.
Sure. So there's no doubt about the fact that it's done very well in the third quarter as far as United Breweries goes. Of course, this is the beer maker that we're talking about. So starting off with the revenues, we've seen an over 17% growth on a year-on-year basis, and it's bucked the industry. I'll come to the industry a little later, but when it comes to the revenues, as you can see, we've seen a 17% gain. The only reason why we're looking at a decline of 3% in its profitability is because of a higher tax outgo. Its operational numbers are very much in sync with what we've seen in terms of revenue growth. So as you can see here, 19% growth and an expansion in margins as well at around 12.7%. Well, largely in line. There has been a little bit of pressure with respect to gross margins, despite the fact that, you know, a company like United Breweries does have the advantages of the falling price of molasses. But on the other hand, we have seen some other input costs also inch up higher. And despite that, we are looking at a little bit of expansion. Moving in, what we're also keeping an eye on is, of course, volumes. That's the big reason why we are seeing a 17% growth on a year-on-year basis. Volumes stand around 12% in comparison to 6% when it comes to some of its peers. So it certainly outperformed its peers in the industry, especially when it comes to the beer industry. In terms of the geographic reach and how it's done, it has seen market share gains in markets like Rajasthan, Karnataka, and Orissa. On the other hand, she's seen some weakness and declines in a market like Kerala, and the reason they attribute is the weakness owing to the highway ban. And so that is, kind of bearing down on some states still as far as United Breweries is concerned. Let's pull out the GDL. And again, in terms of, the volumes, as you can see here, about 267 times in comparison to the 20-day average. So United Breweries is one of those stocks which is gaining in today's share of trade, despite the fact that we've seen some weakness in the broader markets. Now, in terms of consensus, again, we don't have too many analysts following the stock. However, out of the 9 analysts that do have a coverage as far as the Bloomberg consensus is concerned, only 3 of them have a buy right now, and with about 2.56 out of 5, that's the rating. Its 12-month price target is at around 1,033, but it's currently trading well over that mark, and that's possibly the reason why we don't have too many buys there. But on the whole, we just have to wait and watch whether or not the numbers for this quarter change the analyst estimates and ratings as we move in over the next few sessions.
Thanks a lot, Agam, for that information. Good set of numbers. In fact, you also saw the finance cost going lower if you compare it either on year-on-year basis or sequentially. In fact, in the press release, they've highlighted the interest cost has gone down for the company by almost 100 bips. And remember, the performance you've seen is after the West market for the company did not perform that well because the excise duty had gone up in that market. So let's see if in the coming quarters they can keep pace with the kind of volume growth they have posted for the third quarter. Some respite, at least for a couple of counters, because remember, United Spirits was a big dampener in terms of December quarter earnings. Okay, moving ahead, it's not time yet to call the top on Indian equities. That's the word from market veteran Ramesh Damani in a conversation with Bloomberg Quint earlier today. He said that the rush of liquidity into the markets had pushed the broader markets way ahead of fundamentals, and a correction has been on the cards. But he does not think there is anything to worry about in the long run. Listen in to a slice of the conversation.
You've had 3 or 4 occasions when the market has fallen in Sensex terms 600 to about 1,000, 1,200, sometimes even 1,500 points. They happened on Demon Day, they happened on Brexit Day, they happened when the China crack-up happened in 2015. And the market has recovered from all those fairly nicely. So my first get-go to you was that this is a correction in a bull market. Corrections in bull market, for your viewers, always short, sharp, and swift. So they shake out, except the staunchest believers in that market, they shake them out, and then the market resumes its uptrend. It's just kind of a reminder that it's so hard to make money in the market that you have to remain committed long term in order to truly enjoy the benefits of a bull market. So my first reaction was that the market did that. But then, of course, when you add the global potpourri of events of possibility of rising interest rates out there, possibility of the Dow having topped off, that gives me some pause that maybe we'll have to weather this storm for a little bit longer. The good news, of course, Neeraj, is that the Indian economy is finally starting to do well. I think the third quarter results have been ahead of expectations of most analysts. There are green shoots of recovery well underway in the economy. A lot of sectors are doing well. So in terms of earnings, at least, I think there's reason to be more optimistic about the market.
How much of a dampener can this have to the overall scenario? I mean, Ramesh, what I mean is, until last week, the entire conversation, not just for India but across the world, was about how growth is looking up. Now this talk of yields in India, the added bogey of the budget and the long-term capital gains tax has come over to take at least center stage on the conversation table. How much of an overhang would that be to the overall earnings growth story that we're seeing, not just in India but across the world?
Neeraj, the two things that global markets haven't had to deal with in the last 3, 4, 5 years, or actually since the crisis, is inflation. I think we were most worried about deflation. I think the data of US payrolls suggests that inflation might be coming back in America. The data in India projects that because of the huge spend on rural India, the huge increase in MSP, that we will be fighting inflation in India in the next 6-8 months. Inflation could rise. In the short run, inflation is not necessarily bad for the stock market because it increases profitability. Costs don't rise as fast as prices rise at that point. So in the short run, it's okay. In the long run, of course, inflation is very detrimental to long-term equity values. So I think the first thing we will deal with is inflation, which wasn't dealt with in the past, which of course implies that interest rates whether in America or India are probably headed higher. In India, we've bottomed out in the interest rate cycle. We're probably going to see a higher interest rates, say over the next 6 months to 1 year. And some of the leading economists and the ex-finance minister have also suggested that. The other thing is risk. I think the Dow has come out from a period of extremely low volatility. I don't think it fell in more than 11 months. I don't think the intraday volatility was any high. But I think markets are now rearing the head of volatility again, so we'll have to deal with that. Having said that, I remain optimistic on an Indian recovery. It might take a little bit longer. I think it takes some time for all the malaise that has been built up into the system, all the excesses to be wrung out. But the question I ask myself, Neeraj, every single morning is that, are we seeing a bull market top? In which case, if we think it's a bull market top, we need to sell the rallies. Or are we seeing a correction in a bear market? I think on balance, if you ask me to stick my neck out, I say we're seeing a very sharp correction in an ongoing bull market.
Ramesh, if I may just add to, I think some of the headwinds that you already listed, and that is commodity prices moving up, crude, not just crude, but I think we've seen that in a fairly sharp metals recovery over the last 6 to 8 months, now. Does that not change fundamentally your stance, maybe not on the top with regards to the bull rally, but at least a slowing down of momentum with regards to the bull rally for this calendar year, given that where we stand today, everything now seems to have been fully priced in?
Well, you could say that about some mid-caps, but they don't really count. I mean, in terms of the percentage of float to market cap of India, is the large caps count. And if you look at, say, tech companies, pharma companies, OMC companies, they're trading at fairly, reasonable PEs with, actually handsome dividend yields, and companies that have just bought back their shares. So, I would not make that argument that the large cap stocks in India are grossly overvalued. I think because of domestic liquidity, we had a huge run-up in mid-cap stocks, and quite a few analysts have come and warned against keeping on chasing those higher returns. But that's typical of a bull market, that people get complacent and people get carried away and the multiple keeps expanding. And then there's an occasional reality check that as we took place after the budget. In terms of the market being disappointed by the LTCG, yes, it's disappointed. Anytime you tax people some more, they are going to be disappointed with the additional tax out there. And I think we don't like the framework. I think if the government had, say, made an effort to reduce STT, saying we're going to normalize LTCG but reduce STT, the market would perhaps have reacted correctly. Just look at what is the history of tax introduction in India. You introduce the minimum alternative tax at 7.5%. It's above 18% now. You look at the service tax, is introduced at 5%, it's 18%. You look at the dividend tax, it's up to 25% from a low single-digit number. So what happens is once the government gets its foot in through the door, it opens it wider and wider and taxes it more and more. So you had a system that you designed, STT, to encourage people to come into the market, to encourage capital flows. And now in one fell swoop, you've discouraged it by introducing LTCG and retaining STT. So the market was a bit disappointed with the fact that the statements coming post-budget also have not been exactly morale boosting for the markets. But overall, can the market live with the 10% as LTCG? I think they can. I just think the government, in terms of economic policy, should align incentives a bit more precisely.
Well, that's an interesting conversation and a clutch of ideation, if not specific ideas. You wouldn't want them any which ways. But a lot of ideation about how to go about picking up companies which can do very well over a period of time. I think that was the nature of that conversation. That was the conversation that we frankly wanted with Ramesh Damani. Okay, the conversation that we now want is what to do in a scenario of trade in the last 1 hour, actually slightly less than 1 hour of trade. And we'll get in our technical experts on board. Hemen Kapadia should be joining us any moment. Sumeet Bagadia, I'm told, is already with us. He's the Associate Director at Choice Broking, and he joins us on the show in a moment from now. We'll also have Deepak Jasani from HDFC. But Sumeet, let me start off with you first. Quick thought on the indices. Are you if somebody doesn't have an existing trade, what would you recommend, Sumeet? Long, short, Nifty, Nifty Bank, what is the index you are trading?
Hi, good afternoon.
Good afternoon.
Well, see, markets have gained a sharp correction in last 2 days, and we have seen a huge volatility in the markets. Now, immediately today also, after seeing a gap down opening, now we have seen that Nifty has given a move of around 100 points, and then again it's down by 50 points from higher levels. I think we are going to see the same type of volatility in next couple of days. Overall, in such volatility, I think the bias remains positive. Immediately, Nifty has major support at around 10,500 levels. So till that time, these levels are not taken away convincingly, I think it's better to avoid short positions at lower levels. If we get any dip from present levels, then that should be used as a buying opportunity. Purely for a trading perspective in Nifty, one should maintain stop loss of around 10,600. And on higher side, there is a possibility that we might see levels of around 10,750, 10,770 in next couple of days. For a trading perspective, 10,600 should be the stop loss. And for overall positional trade, 10,500 should be the stop loss. Till the time these levels are not taken away, it's better to be on buy side. As far as trade on Bank Nifty is concerned, we have seen a huge correction from higher levels, and now immediately for a trading perspective, 25,700 is good support. So till the time these levels are not taken away, it's better to be on buy side in Bank Nifty too for an immediate upside till 26,400, 26,500 levels.
Okay, Sumeet, what about your top trading strategies for the day then?
See, the first pick for the day is Bharti Airtel. Today we have seen a good amount of recovery in Bharti Airtel, and from lower levels the stock is quoting at around 440 levels, and from lower levels we have seen a move of around almost 25 points. I think immediately from here on we can see a move till 460, 470. For a trading perspective, one can initiate long positions in Bharti Airtel at CMP with a small stop loss to be placed at 425 levels on lower side, and on higher side one can maintain targets of around 460 and 470 levels. The second pick for the day is ITC. We feel that ITC has good support at around 270 levels. So till the time these levels are not taken away convincingly, it's better to be on buy side. One can initiate long positions in ITC at CMP. If there is a dip of around 2 to 3 points, then that should be used as a good buying opportunity for an immediate upside till 290 levels, and if 290 is taken away, then we can see move till 300 levels also. So overall, for a short term as well as for a medium term trading perspective, we feel that ITC is a good counter. One can initiate long positions with a strict stop loss to be placed at 270 levels on lower side.
Okay. Sumeet, stay on. So much more to talk about. Just want to mark Colgate before we get into a fundamental conversation with Deepak Jasani. The numbers came out. The volume growth looked reasonably robust, and the stock just spiking up a little bit. Not too much really. I think the market doesn't permit that, but a bit of a spike up into Colgate post those numbers. 1123 currently is where that one is trading. Okay, let's get in. Deepak Jasani is head of retail research at HDFC Securities. He joins us right now on the show. Deepak, thanks so much for joining in and taking the time out. You know, I'm looking at the broader end of the spectrum, Deepak, and a clutch of names which until a week ago almost everybody was falling over each other to buy are available at anywhere between 10, 15, 20, 25% discounts to the peak market caps. Is this an uptrend that has been disturbed so much that it will take some while to it to come up? Or are you telling your select clients to go out and start nibbling already at some of the large mid caps or large small caps, as the case may be?
Good afternoon.
Good afternoon.
There are two parts of your question. One is whether the uptrend has halted for quite some time. Coming to that, yeah, I think we are sort of seeing some sort of a reversal in the uptrend. An intermediate downtrend could have begun. This has to do both with the global factors as well as the local factors. There is no point in blaming just the budget for the reversal. We were sort of ignoring, the whole globe was ignoring the rising interest rates across the globe. And that is why, despite the rising rates, equity valuations kept rising. Now at one point, when the 10-year GSEC is at 2.84%, people have gradually come to realization that this cannot go on forever. Equity valuations will have to sort of contract a bit. And adding to that, in India we had this budget where Every time it happens that budget we have a lot of expectations, and this time also the expectation was that it would be a populist budget. To the credit of the finance minister, it was not so much a populist budget as was feared. There were certain negative outcomes of the budget in terms of fiscal deficit, in terms of long-term capital gains tax, but they are not so huge as would result in such a big reversal in the trend. So now basically a confluence of 2 or 3 things together has resulted in this reversal. And this reversal could take time to sort of again form some sort of a bottom and rise. But now again we are not saying that we will see a bounce after this 1 or 2 days of fall. We could see a bounce. We can again go towards the earlier high. Maybe we make a double top. What will prompt that is difficult to say at this point of time, whether rollback of some provision or some other event. And then probably we will see we could see a slightly sharper or slightly continued fall. So that is what we felt on the first part. Then the second part, whether the clients should buy, not buy, nibble, there again it will depend on what kind of asset allocation strategies you are following and how much proportion of your financial assets constitute the equities at this point of time. So in case you are still underinvested in equities, then it is a good idea to start nibbling in a staggered way, start buying stocks where you think there are values. But if you are already over invested in equities, then no. We would rather ask them to sort of rebalance them and get out on bounces, reduce their equity holdings on bounces rather than keep adding.
Wow, that's not a very bullish view. I mean, I'm guessing you probably believe that the upsides are capped for the near term.
I would believe so.
You would believe so. Okay. In which case, I'm sure Navneet has a lot of questions too. But I just have one small question, Deepak. The common retail investor behavior, and I don't know if it's different this time around, but could be, I'm not saying would be, but could be that there were stocks that were available, as I said, at a premium to what the prices are right now. Let's go out and start nibbling. And some quality names which have reported very good numbers in Q3. All of these or most of these would be available at lower prices compared to those previous times. I mean, are you guys in the process of bifurcating what is a good buy, even, I mean, with a waiting period which is substantially longer than a 6-month period, versus what even after falling is probably not available at a good price? I mean, are there themes here? Are there specific stocks here?
Now here, typically the retail investors' mentality is that in a bull phase, there is euphoria, people disregard all negatives, people just jump on, they hear what their peers or their neighbors have made money in which stocks, and they blindly, without having regard to the risk involved, they will keep buying stocks at every higher level. And when the reversal happens, they will run away from the market, stay away for some time. That sometime I don't know whether it will be 1 week, 1 month or more, I don't know. But very few retail investors will want to come back so soon after seeing such a sharp fall in a couple of days' time. And anyway, this time around, a lot of retail investors came in through the mutual fund route. So that is a savior in a sense, although those NAVs have also fallen, but not to the extent they would have fallen in case of individual stocks. Now, individual stocks, as you said, have fallen 15, 20, 30%. NAVs would have fallen, say, 7, 10%. So in a sense, they are protected by going through the mutual fund route, and they would realize the advantages of investing through the mutual fund at such times only. So at this point, I would think they would wait out a little more till things stabilize and then probably try to bottom fish or come back to the markets.
Okay. By the way, just before I ask Deepak Jasani about his stock idea, I just want to mark the sugar names. I don't know if they are reacting or no, but should pull up Ugar Sugar, Dhampur, Balrampur Bajaj, Hindustan, and some of the others, because I think the import duty on sugar has been raised, and that's positive news. The Food Ministry has proposed doubling of the import duty on sugar to 100%. Now this is, remember, a proposal. It's not really something which is a done deal, but all the sugar stocks have moved up on that. It's naturally a price inflator. I don't know in these times and moments how much of a price uptick on sugar is something that the government would be comfortable with as well. But I'm guessing if the food ministry has done this, they've done this with some logic. This is in order to check the falling wholesale prices as well. Remember, sugar prices have really come off the last few weeks or months, and this could be a shot in the arm that sugar stocks needed. It's still a proposal, Deepak, but assuming that the proposal goes through, even if not 100%, then maybe 50 or 75%, how material and how fundamental a benefit can this mean for the sugar companies?
Yes, sugar companies are typically cyclical or trading kind of a companies. You cannot invest and forget about sugar companies because of a couple of reasons. One is your crop typically is low every third or fourth year due to the pricing scenario. Every time the prices go up, then there are government restrictions and all, and then there is a bumper crop, then the prices crash. Then there is a shortage of inventory, then again the whole cycle repeats every 3 years or 4 years. Secondly, there is a lot of interference at the state level because of the impact on the common man in terms of food inflation, in terms of availability at a good price, and also in terms of satisfying the farmers about the cane price. So on the one hand, we have on the raw material side, they will have to keep paying more and more sums by way of cane prices. On the other hand, on the supply side, their realization depends on the policies followed by the government in terms of the areas where they can sell, in terms of the import and export duty, etc., etc. So literally their hands are tied. There will be a window where they will make supernormal profits, but those profits may not sustain. So visibility of continuation of profits is limited. So in that sense, sugar, you will be able to trade. You should be able to trade for a few months or a few quarters. But whether you will want them to be on your portfolio for 3, 4, 5 years, I am not so sure.
Deepak, as a house, you guys like NMDC, where you guys have a target price of almost 151 or 163 over 4 to 6 quarters. Could you take us through the rationale with regard to the buy call on this?
Yeah, so NMDC is one report that we have issued this morning. Now in this circumstances or in this situation where the markets are correcting or falling, we have opted for a stock which is resource rich and which has fallen over the before the budget related fall has begun. So in that sense, we felt that NMDC is a decent pick. Maybe it will also have its own volatility. So we have a buy at 133 and add on dips to 119 to 123. Our targets are 151 and 163 over 4 to 6 quarters. The reason we are bullish on this company is basically the plans of the company to increase the extraction of iron ore, doubling of the extraction over the next 3 or 4 years. It has enough reserves to be able to do that. It is also forward integrated into steel manufacturing, and that plant will go on stream in FY20, which will bring additional profits, having regard to the current buoyant scenario in the steel sector. It has declares sufficient dividends. The dividend yield is close to 5%. So return ratios are decent. So all in all, a safe defensive bet which could do well once this bearish scenario sort of goes away, or even we see some stability at lower levels. People will find this stock to be a little more attractive and with lower risk than in other stocks, I believe.
Okay, Deepak, stay on. So much more to talk about. Mind you, LNT has fallen off, I think, in the last few minutes of trade. Yeah, now at the lowest point of the day. down about 4%. HDFC was anyways down and out, but L&T too has come under pressure, and private banks, IndusInd, Kotak, HDFC Bank are all facing the brunt of selling pressure. Hemen Kapadia of KRChoksey joins us right now on the show. Hemen, Nifty Bank looks really wobbly. I don't know what strategy you have on the index, but is there a strategy that you have on the Nifty Bank individually?
I have a feeling that Nifty Bank, like you said, no, I don't have. Firstly, I don't have a strategy only for the Bank Nifty, but we are at 26,017 in spot, Neeraj. I think closer to, okay, this is far away, but if we come closer to 25,750, 25,800, I take a contra call. Either I'll buy calls for the short term, or to play it super safe, I'll sell the 25,200 puts, which I don't think is going to come without a correction. So one, I would not short anything at this point in time, though there could be some more pain. The easiest option would be to buy a call option, or what I would prefer would sell slightly out of the money puts, because I don't think that's coming.
You're also suggesting to buy the 10,900 call of Nifty?
Yes, because I have a feeling that that is, Navneet, that is currently what, around 30. I mean, buy the slightly lower levels at around 30. I say don't keep a stop loss. At the most, you're going to lose $30. I have a feeling that, okay, there's a short settlement, 22nd is the last day. But we should be back to 10,900 by the end of the month. So I am not bearish. I say this is a correction within the bull market. Market was itching to correct. Multiple times we thought it should, it didn't. Fine, the market is always right. Now it's come to a time too late to sell, too early to buy, but I would go long rather than short. I wouldn't do anything right now, but a little bit more adjustment, maybe a small bounce, maybe, but I have a buy call on the 10,009 call.
Individual stocks, Hemen?
I think ACC is getting oversold. ACC is something which is looking quite interesting, Navneet. We're down to 1632. I have a call at, buy call at slightly lower levels, assuming some volatility and some cool sell-offs. Around 1615 is the entry price, 1590 is the stop loss, and 1665 is the target. This is all for the current settlement till 22nd. And the other buy call is on Ashok Leyland. That's moved up a bit. I thought one would be prudent to buy it near the day's lows, but it's moved up. So only if it comes down, 122, 115, 136.
Well, Ashok Leyland is definitely moving higher on back of strong set of numbers. The volume growth was strong. The realizations this time around were on the higher side. Just want to mark a few more stocks from the broader markets. Pull out Jubilant Life Sciences. That too has moved higher in the last half an hour or so. The stock will just come up on your screen. It's trading with gains of nearly 9 to 9.5%. Slightly off day's high, but still sitting with gains of 8.5%. The other one which has moved higher is Intellect Design Arena. That stock's trading with gains of almost 10.5% right now. Intellect Design Arena trades around the levels of 189.5, almost at day's high. Well, since we're talking about the buzzing stocks from the broader markets, let's see what Nikki Mirchandani is tracking for the day. Nikki, over to you.
National is the stock that we're tracking today. Good set of numbers that the company has reported. If you look at the jump, it's a 7.3. The stock has risen as much as 7.3 today. Almost more than 1.5 month high gain that we've seen on intraday basis for this company. If you look at the number, it's a good set of numbers that the company has reported. Revenue has risen as much as 11% for this company. Net profit has shot up 21% at a number of roughly 21 odd crore as compared to nearly 17.3 odd crore that we've seen in the corresponding quarter. Operational efficiency creeps in. EBITDA is up by 14% at a number of 46 odd crore as compared to nearly 40 odd crore that we've seen in the December quarter of the previous year. Margins are pretty much stable at 18%. What's really leading to the, if you look at the segmental breakup to understand how the numbers work behind this, branded footwear segment, that's one segment which contributes to more than 50% of your overall revenues. That's almost risen 34% on year-on-year basis for this company. Unbranded footwear segment, that is nearly 38% for this company. That has seen some amount of contraction coming in this quarter on year-on-year basis. Leather segment, 15% of your overall revenue. That particular segment has also degrown. So majorly we are seeing some amount of the growth coming mainly on back of branded footwear segment. Same is the case with the EBIT breakup. Branded footwear, which contributes to nearly 47% of your overall, 65% of your overall EBIT, has risen by 47%, and unbranded footwear segment, which contributes to 33% of your overall EBIT, has actually contracted by 34% for that matter.
All right, Nikki, thanks a lot for bringing in those details with regard to Mirza International on their Q3 earnings. Good set of numbers coming by. Pull up the intraday chart of Canfin Homes. That counter has seen a move of almost 4 to 5% up, or actually 7%. It's trading at day's high. Hemen, anything on the chart at 456?
Significantly higher volume, Navneet, and we've seen an upward bar reversal coming in today. So I think short term the worst is over, but if the stock moves from 402 to 455 intraday, I'm not sure if it quantifies as a fresh buy in market like this.
Well, that's a sharp move which is coming for Canfin Homes. In fact, a lot of your F&O stocks now are moving up. KPIT, NIT Tech, Balrampur Chini's, because all the sugar stocks have been going up. Deepak, what's the view on Bharti Airtel? The counter is one of the top gainers on Nifty after the news of Singtel infusing more funds into the company, and thereby they've increased their stake in the promoter group company. That's one of the promoter group companies of Bharti Airtel. At these levels, does the stock look attractive to you, considering the kind of headwinds that surround the telecom sector?
Yeah, Bharti Airtel basically is a large cap stock and it has undergone a pain period over the last 1.5 years after RGO came into the picture. RGO had temporarily withdrawn some discounts, have reintroduced them, so again there is some sort of a pressure on the profitability of all the telecom operators. But the fact that the foreign promoter has infused money or is willing to infuse money at this point of time suggests confidence by them. So in that sense, there could be upside in the stock. Not a very big upside, but yeah, a reasonable upside from this level.
Okay, so the trade versus the investing idea could be different as well. Just before we hit that break though, I just want to get in Sumeet Bagadia's thoughts on a couple of stocks which have cracked further as the day has gone by. Sumeet, one of them is Larsen, and you can argue that it's slightly off the lows but still under a lot of pressure. The other one is Kotak Bank, which intermittently was showing signs of pressure but showing a bounce back too. That one is under pressure today.
Oh, well, yes, you are absolutely right. L&T is giving a downside move, and looking at the chart, it seems that from here on there is a possibility that some more downside can be seen, in which we can see levels of around 1320, 1330 as an immediate target. We have already given sell call to our clients for a trading perspective. One can initiate sell positions in L&T at 1360, which is the current market price, or there's a pullback of around 8 to 10 points, or probably 10 to 15 points from present levels, and that should be used as a selling opportunity for the downside target of 1330, 1320 levels. And on higher side, till the time 1390 or 1400 levels are not, 1390 to be very precise, till the time these levels are not taken away, the counter is weak, and for next couple of days we can see some more correction. As far as your second question on Kotak is concerned, see, the overall structure of Kotak Bank is looking very good to me. We are expecting a good move in Kotak Bank in next couple of months. But for a trading perspective, for next couple of months, for next couple of days, there is a possibility that some more dip can be seen in Kotak Bank from present levels. So those who are taking a medium to longer term perspective in Kotak Bank, any dip in Kotak Bank from present levels till 1030 or 1020 levels should be used as buying opportunity. And on higher side, if once the Kotak Bank is able to break 1080 level on closing basis, then we can see the counter can head towards 1120, 1130 levels in next couple of weeks. So overall, for a medium to longer term time horizon, one should initiate long positions in Kotak Bank if there is a dip of around 20 to 30 points from present levels.
Okay, stay on, Jamin. So much more to speak about. We'll take a very quick break. Take in final thoughts from Deepak on the other side of the break. But when we come back with Calm Down, the Fab 4 stocks of the day, at 3:15, we'll also tell you what dealing rooms are recommending in trade and some closing strategies a bit later on. Stay tuned.
बढ़ते समय के साथ बढ़ती सुरक्षा का वादा, LIC की जीवन प्रगति पॉलिसी, जिसमें बीमा की अवधि में हर 5 वर्ष बाद अपने आप जोखिम सुरक्षा की राशि में बढ़ोतरी होती है। LIC की जीवन प्रगति पॉलिसी।
City Union Bank, trust and excellence since 1904. City Union Bank, trust and excellence since 1904.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're still watching Countdown with us on Bloomberg Quinn. If you could just pull up the stock of TTK Healthcare, that's gone up just in the last 5 to 10 minutes of trade. It's trading with gains of almost 10 to 11%. Finally, a cool-off has also been seen. Remember, the earnings had come on Friday and the stock reacted positively on Friday as well. It was up nearly 15% in a trade. Deepak, before we let you go, since you expect more correction in the markets to come by, in light of that, what sort of sector rotation would you be working with?
See, the sectors which have done well over the last year or so, and which are quoting at expensive valuations, so they all could come under selling pressure or profit taking, as it were. The sectors where some money could sort of shift could be IT, large cap and mid caps, pharma, selectively depending on the stocks. Then cements and metals at a particular level. I don't think at the current level cement and metals should be looked at. You could wait for a little more correction on those. And infra and realty, there a little more correction than the cement and steel. So these 4 or 5 sectors, I think one can look forward to in the next 1 or 2 quarters. And then if the other sectors have corrected sufficiently or enough, then we can re-look at them also.
Okay, Deepak, many thanks for joining us today and giving us that perspective. Always appreciate you taking the time out.
My pleasure.
That's Deepak Jasani with his thoughts. Now, before we move any further, it's that time of the show when we're getting Yash Upadhyay with the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. So, Westlife Development reported a good set of numbers, with the stock surging as much as 7% today. Their revenues adjusted for excise came in 26% higher on a year-on-year basis, while the company also reported a net profit of 8 crore rupees versus a net loss of 2 crores for the same quarter last year. So, good numbers from Westlife Development. Bharti Airtel also had surged as much as 6% today after announcing that Singapore Telecommunications will be acquiring an additional 1.7% stake in its promoter company Bharti Telecom for a total consideration of about 2,650 crore rupees. As part of the deal, Bharti Telecom will be issuing some 8.5 crore equity shares at a price of about 310 rupees. Arshia Limited is another stock that we are watching out for, and it has snapped its 6-day losing streak after the company said that it has sold 6 of its warehouses located in Panvel, Mumbai for a total consideration of about 534 crore rupees to Ascenda's property fund. Of that 534 crore rupees, the company has, as of February 3rd, received 434 crore rupees and will receive the remaining 100 crores over the next 4 years based on achieving certain performance milestones, as they say in their press release. And finally, we are also looking at sugar stocks, which saw a late move in the last 15-20 minutes on the back of reports that the Food Ministry has proposed the doubling of import duty on sugar from 50% to 100% in order to curb cheaper imports and arrest the fall in the wholesale prices. Back to you.
Hey, thanks a lot for that. I'm picking up one of the stocks and starting off the conversation with Nitasha Shankar. She joins us right now on the show. Nitasha, probably not a good time to be talking about buying, and we'll get to the behavior and levels in a bit. But since we were talking about the Fab 4 stocks, Westlife, it's not a liquid name, but it follows Jubilant FoodWorks in that the same-store sales growth very, very robust.
So that is the exciting part about all of these stocks which are directly or indirectly related with retail. I could call them retail rather than looking at them as pure consumption plays, because there's been a sizable amount of shift which has happened from the unorganized sector to the organized sector, and we've started seeing that reflect in the same store sales growth, both for Jubilant FoodWorks as well as now for Westlife. And we do think that that's a trend we would continue to see quarter on quarter in the coming quarters as well. So which is why that is an entire space that we are quite positive on. I think right now we have Future Retail under coverage, so that's a stock we are positive on. DMart, we are positive on it as well, and a couple of other names which have slipped my mind right now, but yes, we continue to remain quite positive on this sector.
Well, what may worked for both Jubilant as well as Westlife is the GST rates were tinkered from straight 18%. They were, now I think they stand now at 5%. But I guess they don't get that benefit of credit which most of the companies are getting now. But still, besides that, they've been posting good, at least same-store sales growth number. Nitasha, for the markets overall, what's the sense you're getting? Is this just a correction of the bull market? Or can we say it's the start of the bear market, which I don't think so, because we've just corrected like 500 points from the top.
I think there's a lot of uncertainty related to long-term capital gains tax which was imposed, but there are two ways to look at it. One, if you're looking at the other asset classes, they were always taxed. So the gains on that were always taxed, and equities was pretty much the only area which was not being taxed. But even then, adjusted for tax, the returns that equities have delivered over a longer period horizon have always been way more attractive. So if you really look at it, this kind of a correction actually gives you a good buying opportunity. But having said that, there are a lot of people who are panicking, and there are a lot of investors who would prefer to sell off before 31st of March, just so that they don't pay a tax on it. I hope they don't do it at a loss to themselves, because that is something that ends up happening. But otherwise, it's just a short-term thing.
But that's typical retail behavior. Like, that's not market determining moves. I mean, retail will probably do what they do irrespective.
So I think it's not just the retail investors, but also holding companies which could look at, trying to just readjust their portfolios. At the same time, there's also been certain amount of taxation that has been announced for the dividend announcing schemes, which we do think that there could be a certain amount of a shift happening from the dividend schemes to the growth schemes, which could lead to a certain amount of sell-off. And of course, the global weakness is something which is persisting. But in terms of valuation, I think this is a good thing that is happening in the market. We should actually look at it as an opportunity to buy and not use it as an opportunity to panic further.
Okay, any thoughts on Vakrangi and PC Jewelers?
No, not really.
No thoughts?
No thoughts whatsoever.
Okay, we spoke to the managements, at least Vakrangi, and they were fairly defiant in their conversation and saying that they haven't done anything untoward. The whole conversation, of course, is there on the website too. The stock not seeing any kind of respite, down on the 10% in the session today. A lot of good names, Nitasha, have come down. So I'm looking at companies which were favored very favorably until recently, and probably a bad stock market doesn't mean the business has gone bad. But Sterlite Tech, Dilip Buildcon, there's weakness in NBCC, which received a slew of orders as well. Mindtree from amongst mid-cap IT is gone down too. Anything out on which you have a coverage?
So Mindtree looks attractive at current levels, and that's an area which we spoke about last time as well, that in case of IT, things are improving. Of course, a broad-based recovery is something which is still a while away, but there are certain stocks which have started looking quite good. And post the correction that we saw in the past couple of days, stocks like Mindtree are looking good. Sterlite Technologies, if you look at the kind of fiber that is required for the smart cities, as well as just for the data coverage which is required in the country, Sterlite is going to one of the best.
It's an expensive stock.
It was always an expensive stock
and
in terms of valuations, but yeah, right now it's better than what it was earlier.
That's definitely true. Hemen, just a thought, can I not ask you about Mindtree? Down 4% today on a day when almost all the other mid-cap IT names are actually doing well. The likes of Intellect, Polaris, etc. having a great day today.
Mindtree is probably entered into a 3-4 week correction. We saw the move from 470 to 790. I think we're going to take probably 3-4 weeks to consolidate, correct, and then resume its journey. So welcome healthy. It's going to take time. I don't think it's going to recover in a hurry or significantly take out 780.
Okay. Well, whether an IT name features in the list of companies that will get in the ban, I really doubt. But let's talk about that list, Navneet. Stocks which will come in or get out of the F&O ban.
Well, I don't think there are much of positions being taken today. A lot of unwinding that one has seen in the past few sessions. But watch out for JP Associates. That's the counter which may come out of the F&O ban for tomorrow's trading session. Reason being, it was very close to coming out. If you look at the overall open interest as a percentage of market-wide position limit, as on Friday was 80.5, and for a stock to come out of the F&O ban, it has to breach the mark of 80%, and that is pretty much visible when it comes to the option strikes as well as the futures of JP Associates. And if I'm not mistaken, you could just pull up the futures. The stock's also trading with gains of nearly 2.5 to 3% in today's session. What you're seeing for February futures, basically there's no addition when it comes to the open interest. The unwinding has taken place for a couple of the option strikes, but mind you, the trends do change in the last 15 minutes of trade as well.
Okay, yeah, let's wait and watch what happens to some of these trends. By the way, I'm really interested in knowing what's happening at the large cap end of the market. We'll talk about what's happening in the mid cap end. Bombay Dying, for example, is up 15%, Intellect up about 12%, but everybody talks about how in slightly troubled times, look at the large cap end of the market. So let's try and do that. Let's talk about the HDFC twins, Nitasha. 4% down for HDFC today, a couple of percentage points down for HDFC Bank. There are these natural tailwinds that will definitely happen for these two in terms of the fundraise that they do and the overall adjustment to the price to book as well. Now, agreed that in a slightly skittish market scenario, the price to book multiples for even premium names like HDFC twins would come down. But would these purely be opportunities, if not so much for HDFC Bank, then for HDFC, which has corrected a lot more?
HDFC Limited, we would agree with that. It looks like an opportunity, but on the bank side of it, we believe that it's largely just adjusting for the increase in bond yields, which is expected because of the fact that there would be higher borrowing this year, related to the entire fiscal deficit target. So if you adjust for that, the correction that we've seen in the price to book for HDFC Bank still does not look that lucrative. So a bit more correction, we would definitely be buyers over there.
Okay, what about HDFC and what about HDFC Standard Life as well? Because that was one insurance company that everybody was again wanting to buy into, and that has also seen a bit of a correction.
So let's talk about the insurance one first. People who were unable to subscribe to the IPO and who were unable to get any subscription over there, they should use these kind of corrections to try and get into it. It's a great stock. Nothing has changed in terms of fundamentals. And if you're looking at the entire focus on insurance, that's an area which is going to continue to deliver the growth. So in terms of fundamentals, there's not been much of a change. As far as HDFC Limited is concerned, we do think that the traction on the home loan side should continue. Home growth, credit growth should be something which would be better, which would continue to outpace the other lines of credit. And that is something with at least HDFC has the best franchise over. So we would start accumulating the stock during such kind of dips. But HDFC Bank, yes, we would prefer a little more correction to come down to make it a buying opportunity.
Okay, not HDFC Bank then, maybe a couple of other HDFC names. Yeah, there is weakness today in Larsen. It's down about 3.5. And from amongst the large cap IT names, I think TCS has corrected a bit in trade today. Hemen, any thoughts on these two large caps?
TCS, I think laws of gravity, because it gave a breakout at 2812 Neeraj, 5-year breakout, went too fast, it's cooling off. So, but once again, it's a correction within a bull market. Nothing changes. It remains bullish and it's going to remain bullish for some more time. L&T also, I think, a similar situation. It gave a breakout at 1262 Neeraj. We went to 1470 and now we are cooling off. So we could cool off some more, but yeah, once again, the bigger picture remains completely solid, not a problem.
Okay, so bigger picture remains solid. On the gaining side, Tata Motors has had a good day today. Sumeet, Bagadia, 3% higher for this one, 395 and counting. Is there a trade here?
See, if we look at the auto space, I think this is the only stock which has not given a decent return or decent move in last year, that means in 2017. But as far as 2018 is concerned, I feel that from here on we can see a good upside move in Tata Motor. Technically speaking, Tata Motor has very good support at around 370, 380 levels. So till that time these levels are not taken away, I think one should avoid short positions, and in fact one should initiate fresh long positions in Tata Motors at CMP. And if there is a dip of around 8 to 10 points from present levels, then that should be used as a buying opportunity, because from here on we can see a pullback move in the counter in which we can see levels of around 425, 430 as an immediate target. Once the stock is able to give closing above 440, 450 levels, then we will see a fresh upside move in which we can see levels of around 500 in next couple of months. So for a trading perspective, and as well as for a longer term time horizon, one can initiate long positions in Tata Motors at CMP or on dips in prices till 385 levels should be used as good buying opportunity for the upside target of 425, 430 levels.
Okay, we'll be waiting for the Tata Motors numbers today, but before we get the dealing room check, I just want to pull up Radico Khaitan. That stock has had a sudden surge in the last 4 to 5 minutes of trade. Remember, we were talking about the earnings of United Breweries, which were on the stronger side. Look at Radico Khaitan, the kind of buying which is coming at lower levels. 364 is the level, and it's trading with gains of almost 12.5%. We'll get some views going on the alcohol space, but before that, it's time to take a look at what the dealing rooms are recommending in today's session. Yatin Moda and Darshan Mehta joins us as usual. Good afternoon to both of you. Darshan, over to you first.
Yeah, so selective, there is some bit of accumulation. One of the stocks which has recovered significantly from the lows of the day is India Bulls Real Estate. The starting tick was close to almost 188. Some of the HNIs are actively accumulating the counter. This seems to be showing a little bit of underlying strength. So India Bulls Real Estate is being spoken about in some of the dealing rooms. Next one is Jubilant Life, stock trading at fresh 52-week high. There is enough accumulation by some of the domestic mutual funds, and dealers indicate that technically it looks extremely strong. And the third one is the pharma space as such. You know, across the board, there is buying that's happening in the pharma space. So some of the funds have started accumulating pharma stocks at this point of time. Sun is trading at the day's high. Lupin ahead of the number seems to be seeing a little bit of accumulation. Aurobindo Pharma seems to be doing well. So there seems to be a little bit of accumulation that we're seeing in the pharma space. But Yatin, what are you hearing?
So DLF, that is one stock in the real estate space which is moving higher in trade, and dealers on the basis of F&O trends are recommending this as a buy. On the basis of F&O trends, so 2.5% higher for this one. Good bounce back from the day's low. So DLF is going good. United Spirits, that stock has come out significantly after the quarterly numbers. So we have seen almost a 10-15% kind of a correction here. Dealers do indicate that there is buying seen at lower levels, and that is the reason why they are advising a buy on every decline. So this is one stock wherein dealers remain positive on from the trading side. And in the cash segment, watch out for Jindal Saw. That is one stock which is showing some good bounce back as HNIs are said to be buyers in trade today.
Well, we'll watch out for these names. Thanks a lot for that, Darshan as well as Yatin. Well, 2 minutes to go before we get in the closing strategies from our experts. By the way, the auto numbers today have been heartening, haven't they been? Bosch, I thought the margin expansion was there to see. Escorts, their commentary on market share gains, etc., was fairly robust too, at least I thought so. Their talk of gaining maybe 11% market share was heartening. The stocks are duly reacting to. Do you like either of these two?
We prefer Escorts over Bosch, purely in terms of the incremental gains that we see over there. But having said that, we are positive on Bosch as well. So between the two, if I had to choose, I would choose Escorts first and then Bosch, but I would still end up choosing both. The entire auto sector as well as the auto ancillary sector, we do think that they would continue to benefit from any kind of incremental growth in the economy, because they tend to enjoy a multiplier effect to economic growth. And at the same time, with the OEMs trying to move towards different, trying to adhere to different norms, regulatory norms, trying to come up with different models, that would mean incremental business for the auto ancillaries as such, which benefits Bosch as such. And especially with the focus on the electric vehicles, with the kind of engines that and the other components that Bosch is able to manufacture, of course, they would benefit. Escorts in particular, we do think that they would see a lot of traction coming in because of the growth on the agriculture side, especially with the government announcing so many stops to try and boost the income at the hands of the farmers. And that would help the entire agri-machinery sector, Escorts in particular.
Okay, and that's the, okay, and then, just wondering, some of these CV players, the large auto companies, Navneet, I heard them today say that there is a dearth of auto components, and that could only mean, one, that either there is a production disruption which we didn't hear about, or that the demand is far outstripping the supply.
So I think right now the demand is far outstripping the supply, because what had happened is that till last year, most of the forging companies also, you saw them trying to cut down on the production which was happening, because there was just no demand in the system. And because of that, they had a lot of idle capacity which was there. And obviously to try and kickstart on that side and trying to increase capacity utilization, there's a bit of a lag over there. Once they start getting the orders, of course, they start trying to increase capacity utilization. But we don't think that there's any dearth of supply. It should start kicking in very soon. And especially on the commercial vehicle side of it, there's not been any disruption that we've heard of. And we would start seeing that happening, and especially the ones who are supplying to commercial vehicle OEMs, we would start seeing better traction and better numbers coming out for those auto ancillaries.
Talking about auto, and Jamna Auto is doing pretty well today. That counter has seen gains of almost it's up almost 9% in today's session at levels of 75. Well, 10 minutes to go for markets to close. Let's get you some trading strategies going from our technical experts. Sumeet, I'll come to you first. What sort of strategies will you share with our viewers today?
See, for a trading perspective, I have one STBT and one BTST. The first one is on buy side, and that is Coal India. One can initiate long positions in Coal India at 295, 294 levels, with a small stop loss to be placed at 289 levels on lower side for the upside target of 305, 310 levels in next couple of days. The second pick is on sell side, and that is STBT, that is L&T. We have already discussed about L&T. L&T is looking weak. I think immediately for next 1 or 2 days, one can initiate sell positions in L&T at 1365 with a stop loss to be placed at 1390 levels for the targets of 1320 in next 1 or 2 days.
Hemen, what about you?
Buy Arvind at 389, stop loss 385, target 397.
What about investing though? And I know Nitasha, Shankar is saying that don't be a brave heart and go out and invest, but let's assume maybe not at these levels, lower levels. But let's not give viewers too many choices. Something that you really like.
I think stock that we really like right now is VST Tillers. The entire agri play and agri machinery play would help them out. At the same time, they have a lot of idle capacity in hand, which they're utilizing to come up with this medium HP tractors, which is the area where we are seeing a lot of volume traction happening. So there's no incremental capex that they would require because of it, because of which the cash flow yields would turn out to be very healthy for the company. So that would be a top pick within that sector.
Okay, VST tillers, and what's the target return that you have in mind?
So I think our target price is around 3,200 for this.
This is a 1-year target price that you have. Okay, so 1-year target 3,200. I repeat, I think Nitasha qualified her answer saying that you need not go out and buy the stock currently and look at buying it later on. VST tillers is the one she was talking about. 2423 is where VST tillers is trading right now. There's also keep in mind that while there is VST tillers, there is also a VST industry, so don't get confused. VST tillers is the one that we were talking about currently. What else, Sumeet? Anything that you're spotting?
Yes, Reliance Capital. So all these stocks which were hammered on Friday are seeing a bit of buying at lower levels. Pull up Reliance Capital. I guess that's gone up in today's trade. In the last few minutes or something, Reliance Capital is now trading with gains of nearly 5 to 6%. Jain Irrigation, remember I highlighted at the start of the show, it's out of the F&O ban, so that's also gone up nearly 4%. And remember, once again, there was some build-up seen at lower levels on the long side for this counter. And GMR Infra is the other one, which is trading with gains of nearly 5.5%. And Canfin Homes, that's been going strong actually. That's it's actually steady. We spotted half an hour back, and that counter is still sitting with gains of almost 7 to 7.5%. But Neeraj, I guess all eyes after Ashok, Leyland and Bosch will be on Tata Motors. The stock's doing pretty good ahead of its numbers.
Yeah, it's been actually a pretty good day for autos, I might add. And save for what happened in wow, that's a 6% uptake. Save for what happened on the budget day, I think autos by and large were doing reasonably okay for themselves. We haven't asked about the auto names at all today, right, Hemen? Have you spoken about what Ashok Leyland or a Escorts or a Bosch trade
Ashok
could be?
was one of his top picks, I guess.
So my recommendation at the start of the show, but they both moved. But
Ashok is up 6% now.
Yeah, but it had already moved a bit. But I think that is setting the stage, Neeraj, for a decent weekly, monthly breakout. In the sense, we've been in this range and you give a breakout, and now if we take out 133, which we are probably on the, we will over the next few weeks, Neeraj, we're probably setting the stage for another 10% upside from 133. So it's not a short-term call, it's probably a 3-4 week sort of a call. But this looks very interesting. Escorts can also be another BTST.
Ah, it's a big move there. Bosch is the other one, which I think has now only gained strength, and unless I'm very wrong, is trading very close to the high point of the day. I dare say the market breadth would have improved a little bit. It's been a yo-yo, firmly in favor of the declines, yes, but I think the advanced decline ratio should come up on your screen, and you will see that there's again a bit of a convergence after that opening out. So the market breadth towards the close is not doing as bad. Let's enter the WIF command on the terminal and just show you what's happening to the world futures market as well, particularly the Dow futures, because all through the morning we were talking about a 150 to 200 point downtake on the Dow futures. I think we'll just pull out that graphic also, and I think that the pull down is slightly lower than what it was at the start of the trading day. Let's just wait and watch. There were a couple of people making a point about Dow futures also trading close to supports. Let's see if that indeed happens, and there's a bit of a bounce that we see. That's the Dow Jones Mini, S&P Mini, etc. And not a big cash. In fact, the gashes have only come off, and maybe that is aiding sentiment too. So now not as bad as what it was during the start of the trading day. Hey, Hemen, would you trade the index? There's a bit of a late hour pullback. Are you playing this pullback?
Yeah, I think it's worth the risk despite the Dow Jones pressure. So short-term call, but yeah, I think one can do a BTST on the Nifty also.
Okay, one can do BTST or Nifty. We've got a lot of stocks actually moving in the last 5 to 10 minutes of trade. Remember, we highlighted JP Associates for you. It could come out of the F&O ban. That's now trading with gains of almost 7%. We've already highlighted stocks like NIIT as well as KPIT, which have recovered in the intraday session of the trade today. JP Associates currently at day's high. Okay, few minutes for markets to close. Let's head across to Neeraj to find out how exactly the closing is panning out today. Well, Neeraj, 5th day on the trot, but still off day's low.
Yeah, you could probably speak about it both ways, and I'll start with the large caps. Now we will bring up the entire broader end of the spectrum, which is probably more active. But the headline number looks bad, but it's probably the last half an hour of recovery for almost all key indices, including the Nifty Bank as well. The mid caps and the small caps, again, the market breadth convergence that we spoke about will probably indicate that the broader markets have done a lot better than what the large caps did. In fact, there's a tick of green out there. So the broader end of the spectrum not doing too bad. And a clutch of names, IT, some of the hotel stocks, etc., which have all done very well. But I'm sure Navneet will talk about that. Let me address the large caps and tell you what's moving, what's not. Bharti has been a strong stock for most part of the day, up about 5%. Tamo DVR about 3.5, 2.5 respectively. Strength in ITC again, so not bad going for that one. And while private banks haven't quite done well, Axis Bank just about manages to squeeze in the list of gainers. What about the losers? HDFC top loser. HDFC Bank out there about 2% down. L&T, Kotak Bank, IndusInd Bank. So you can see that financials had a lot of trouble in the session today, and selectively IT stayed slightly wobbly too. So no big heavyweights which gain aside of maybe ITC and a couple of others, which is why you have this weakness on the bourses today. But what about the mid caps, Sumeet?
Recovery that was seen when you talk about the broader markets. Let me start off with two stocks which were in focus last week, PC Jewellers and Vakrangi. Well, there was some sort of buying which was seen for PC Jewellers at lower levels after the stock closed 25% lower on Friday. So closing the day with gains of almost 17%. But look at Vakrangi, no respite. Fourth day of lower circuit coming up for Vakrangi, down almost 10% in today's trade. While earnings reaction, Ashok Leyland posted good set of numbers, good volume growth, higher realizations for the quarter, and look at the stock, it's almost closing at day's high with gains of nearly 7%. Bombay Dyeing, TTK Healthcare are a couple of your other stocks from the broader markets which registered good gains. For TTK Healthcare, the numbers were out on Friday. In fact, on Friday as well, you saw the stock moving higher by almost 15%, and today, just in the second half of the trade, you saw TTK Healthcare going up. Intellect, Design, Arena, Polaris, these are the stocks from the mid-cap ID space which staged a good recovery in the second half of the session. Polaris also registered strong gains today. Radico Khaitan, that saw buying from lower level just in last half hour of trade. So good closing coming up for Radico Khaitan. And a couple of your F&O counters, Canfin Homes in the second half saw good buying, so 7% gains there. But on the losing side, you had stocks like Ajanta Pharma as well as NBCC, which are there in the futures and options market, where still some amount of unwinding still continues, Neeraj.
Well, and frankly, if you just look at what's happened at the end of the day's trade, and let's dissect it, this surge, I think it's pretty heartening. So that is one. The contributors list will probably show you that it was banks all the way. But I don't know if the volumes will really be as high as the last few days have been, as Friday's volumes have been. This is what the contributors list is. And as we said, financials right out there, HDFC Bank, ICICI Bank, somewhere here would be Kotak Bank too, right up there, and L&T. But hey, some contribution by ITC. Maruti in the green, which is good to see because it got clobbered in trade in Friday. And Bharti Airtel marginally in the green. But volumes should come up on your screen. And 37,000. So
lower than Friday.
Yeah, scaled back quite considerably. 37,000. And interestingly, FIs bought in the cash markets in Friday's session.
In fact, it was a net buy figure if you adjust both DIs and FIs.
Yeah, so it'll be interesting to see what happens today as well, Navneet. I'm pretty interested in seeing what happens thereof. But par for the course volumes on a day, and the market breadth too acceptable considering how badly the large caps were behaving at a point of time in the day. Some bit of convergence out here as well. Quickly, final thoughts from our experts, then we get the management of Ashok Leyland too. Sumeet, the Bagadia, as we close Nifty Bank the way we do, what's the call on this index for the next couple of days?
Well, the same view which we had said earlier, that from here on we are expecting a move in Nifty and Bank Nifty, upside move in Nifty and Bank Nifty. Your question is on Bank Nifty. So Bank Nifty is closed at around 2690 levels. I think from here on we can see a move of around 400 to 500 points. That means on the higher side we can see levels of around 26,400, 26,500 levels in next 1 or 2 days. For a trading perspective, one can maintain stop loss of around 25,900, and for a positional trade, one can maintain stop loss of around 25,700 levels.
We'll leave it at that. Thanks so much for joining in and giving us that perspective. Let's get in the management of Ashok Leyland that really did well in trade. Sales up 58%, EBITDA 70% growth, the margins improving almost 100 basis points. And I think in the conference call they have mentioned a number of things as well, which we'll talk about. I'm sure Yatin will join in the conversation as well. But let me kickstart that conversation with the CFO of the company, Mr. Gopal Mahadevan. Mr. Mahadevan, thanks so much for joining in. In summary, is this a quarter which set the stage of how Q4, etc. could be as well? Because it was a great quarter on all fronts. I can understand sales moving up. Maybe there was a demon base as well. But the operational number looked fairly heartening too.
Yeah, I mean, it's been a good quarter. I think this kind of was very satisfying for us because we've seen that, we have seen a healthy growth in sales and revenue numbers and volumes in tandem with the industry. And we have seen the operating leverage also kicking in because while our revenues had gone up by about 58%, we've seen that the PAT was about 178%. So I think the credit must go to our frontline guys for ensuring that they're selling the goods profitably, the trucks, the vehicles profitably. We've operating guys have been ensuring, they've been actually ensuring very efficient operations and also focusing on overheads and also on the middle line. So I think, and of course, the mix of the products has also helped. I believe that the industry moving towards higher tonnage vehicles from 37 tonners. Now today, if you look at it, the faster moving vehicles are 37 tonner, 41 and 49 tonners. So these are, of course, more profitable than the smaller vehicles. But then we have also gained, done exceptionally well in the intermediate commercial vehicle segment also. Something hitherto where maybe about a couple of years ago we were not too strong. But I think our ICV business is also doing well, especially also with the launch of Guru, which is, India's first rated load vehicle, which has received a good response.
Hi, sir. This is Yatin from the research team also joining in. Hi, sir, so if you could tell us, from here on, given the fact that in the conference call to analysts, you spoke about how discounting is slightly troublesome in the industry. And it still remains at elevated levels. That is one. And two, steel and aluminium prices have moved up significantly. So on all of these fronts, do you think you will be able to deliver stronger margins moving forward? Are the things improving? And probably, will you be able to pass on all the costs to the customers?
Well, Jatin, I can't say in hard terms what will happen in Q4 exactly. Right. But I can only tell you, like I've mentioned earlier in the past, that I'm trying to be as fit as possible, and whether that will result in a six-pack abs or not, I can't tell you. But very clearly, our focus is on on operating cost. We are possibly the only player in India in commercial vehicles who have been raising prices in tandem with raw material price increases. Because at some point in time, raw material price increases have to be passed on. You can't keep absorbing costs. And yes, you are right. We are concerned that the industry continues to pursue chase customers through pricing. I think that is not the best way of doing this. We need to do it through offering good solutions to the customer, good products to the customer, improving the quality of the vehicle, reaching out to the customer better, ensuring that we are able to help them do business more efficiently. I think that's the best way to acquire a customer, and that is exactly what we are trying to do, at least in Leyland. Of course, there is a price challenge in the market, and we have to compete in a market. We have to be realistic. But at the same time, I think our teams are working on multiple aspects of the business and not just on price.
And sir, one more important question, that I would like to ask is that regarding the spare parts. A lot of commercial vehicles players we spoke to are talking about how there is shortage of spare parts in the industry. So if you could tell us, which are these spare parts in which you are finding, some issue with the vendors? Is it relating to axles, or is it relating to engine parts or combustion units? What exactly, is the industry facing as far as the supplies are concerned for key raw materials and spare parts?
See, I don't know about the spare parts per se, but that since the industry is growing, there are certain supply chain issues that the whole industry is facing, because there are select number of vendors who cater to multiple players. But see, from our spare parts business perspective, aftermarket business perspective is concerned, I can only share with you that they are growing at nearly about 25%, and we are happy with the progress this team is making. We are trying to also there reach out not only in selling spares, but also to identify issues with the vehicle. We are using a lot of digital to enable all of this happen. You know, our recent launch of things like iAlert or e-diagnostics, or even selling spares through a website which we call as Leyland, and also kind of enabling, connecting the mechanics with, the fleet operators and the drivers through service mandi. These are very unique concepts which are first of its kind. So, I think there may be certain short-term supply chain constraints, but in the medium term, I'm kind of sharing what Leyland is doing. We're trying to connect to the customer as efficiently as possible to ensure that the uptime of the vehicles are better than competition. And spares forms a very important part of this as well.
But do you think your vendors will be coping up with the key component requirement as the demand grows, or as the overall base improves, or probably the demand for higher tonnage trucks goes up?
They will. Why would they want to miss an opportunity? Because the basic thing is that this is a partnership, so it's not just a vendor-supplier relationship. So both on the sell side and buy side, we need to work on these partnerships. We are working with key vendors on seeing how they can augment capacity. Sometimes you may have to also look at importing it or sourcing elsewhere on a temporary basis. But I think they are also augmenting capacity to plan for the growth of the industry.
And sir, one final question from my side is regarding market share. Did you gain some market share sequentially in the third quarter, and how is the overall scheme of things shaping up for Ashok Leyland, as the overall sales mix is also improving towards the higher tonnage trucks?
Yeah, I'll tell you, to track market share on a monthly or a quarterly basis is not really, it doesn't really, it's just it is just one of the indicators, to be honest. But to answer your question specifically, we are marginally lower in market share. In the third quarter, we were at 33.4 as opposed to 33.7. So it's about 0.3% lower in market share in Q3. But on a YTD basis, if you were to look at it, which is spread over the 9 months, we're still about 1.1% better than last year. So we are at 33.8. But frankly, I'll tell you, these marginal changes in market share is not something we are worried about. What we are trying to understand is, are we making better customer acquisitions? Are we in the general trend growing? Is our pattern of growth better? Is it not? It should not be just one type of vehicle in one particular geography. Are we well spread out? How is our ICV business doing? Our ICV business is doing wonderfully well. So, with the launch of Guru. So, we are, I would prefer to look at the growth in a more wholesome way than just attach myself to one number called the market share. Market share is important. That determines how well am I doing with customer. But I would also want to see, where am I acquiring those customers? In what type of vehicles are we acquiring it? Am I falling significantly behind, or is it just a marginal correction? So I neither, raise a toast if my market share improves by 1%, nor do I get down in the dumps if my market share goes down by 1%. These are monthly or quarterly numbers. But I would like to see a general trend, and I think there we are doing reasonably well, and we are happy with our performance.
Okay. Thank you so much, sir, for speaking to Bloomberg Quint and taking out your valuable time. So that was the management of Ashok Leyland speaking to Bloomberg Quint as to how the demand scenario is improving, and probably moving forward, the share of higher tonnage trucks could move up. With that, it's back to you in the studios, Neeraj.
Hang on, Yatin, because we have the Tata Motors numbers as well. And Navneet was just talking about how Tata Motors is looking very strong ahead of trade. And the numbers are out. EBITDA up 80%, so revenues up 16%, JLR margins too.
Yeah, both. For JLR as well as the domestic business, the EBITDA margins have gone up for both. For JLR, it's at 10.9, which is up 80 bips. And for the standalone business, I think it's up 750 bips. So that's at 9%. And clearly in their press release, Neeraj, they've said there's a strong turnaround that has been seen for the domestic business so far. In fact, if you look at the consolidated numbers, the revenues are up 16%, which is in line with what the poll was throwing about. The EBIT, that has also gone up by 80 bips if you compare it on year-on-year basis. We'll get you more details with regard to those numbers, but I think it was the domestic side of the business which people were talking about. But if you look at this JLR profits, I guess they are lower on year-on-year basis. Probably Yatin will be able to throw more light on that. But there is an exceptional item too on the Forex front which has been reported. There's a Forex gain of almost, I guess, 120 or 130 crore. We'll get you that exact number. But we'll go across to Yatin and get more details on the fine print of the numbers. Yatin, the top line definitely seems to be in line what your poll was throwing about, and there is margin expansion seen for both JLR as well as the domestic business.
Yeah, that's right, Navneet. But you know, I think the most important number you would watch out for is JLR margin. We were expecting it to be more or less stable on a sequential basis at 12.5%. I think they have delivered EBITDA margin of close to 10.9%. So clearly a 150 basis points miss versus the street expectations. I don't think so market will take it in a positive manner. Anyways, the stock is at a 52-week low. You know, so the probable reaction could not be intense tomorrow. But I think the JLR margins are slightly below the street expectations. But what has surprised on the positive side is the performance of the standalone domestic business. The management, you know, for the past many quarters has been talking about a turnaround plan that they're working on, and probably I think that execution and that effort is playing out. We are looking at the standalone EBITDA margin, which has come in at a strong 9%. We were expecting it to be in the range of 7.5–9% range, so it has come on the higher end of the expectations of the street. In fact, if you look at the pre-tax profits also, that has come in at 200 crore versus a loss of close to 1,000 crores which they posted last year same quarter. So I think the domestic business has done extremely well. JLR continues to face some issues on the operating front. December was a period wherein the discounting was quite high. In fact, they also distributed a lot of one-time incentives to the Chinese distributors in order to push out inventory so that they can make way for the new launches that were planned in January. Probably, we need to watch out for what kind of a realization, was posted on the JLR entity front and what kind of a contribution did we get from the China JV. But clearly, given the fact that there was some transitionary move in the last quarter, which is the December quarter, probably if the management talks about more clarity as to how things will shape up moving forward starting January, then I think the sentiments could improve. But on the operational front, clearly JLR is disappointed. Clearly that could be because of dealer incentives which were given on the higher side, and also the kind of discounting that they were doing on old models so that they could roll out new models starting January.
Okay. Yatin, many thanks for putting that into perspective. We'll leave you to do further analysis. Maybe taking a final thoughts on these numbers and otherwise from Nitasha, Shankar and Hemen, Kapadia as well. Nitasha, you heard the Ashok Leyland management. You've seen the Tata Motors numbers. Any thoughts on both?
I think, like we were talking about earlier, that the domestic business, particularly on the CV side, and for Tata Motors in particular on the PV side, seems to be improving. There are full signs of it. We've already seen that in the volumes, and it's very heartening to see that coming in the results as well. Particularly for both the companies, the margin expansion is something that we quite overjoyed about, and we would continue to remain positive on them.
We'd spoken about Hemen, these stocks going into trade. Are likely that Tata Motors could react positively further to the numbers. Your thoughts here on this one in particular?
It's struggling for a longer term turnaround, Neeraj. It's been a laggard as far as the auto sector is concerned. I have a feeling that some more consolidation is left, but one, there is not much to lose, and if you have a longer term view, I think it really seems like a cinch.
Okay, I think that should be it. Thank you so much, both of you, for staying by for these final thoughts as well. It's important to get those. Hemen, Nitasha, thanks so much for joining in today and giving us that perspective. Well, if it was a bout of recovery for the Indian markets, it's been a gap down opening to trade in European markets as well, with all three benchmark indices trading with a fair bit of cuts. Let's head across to Sandra Kilohoff, who joins us from the London studio. A complete lowdown on how European markets are trading this morning. Sandra, good morning to you out there.
Good morning. Yes, so we're seeing the Stock 600 retreat for a 6-day straight, extending that biggest sell-off in equities since 2016. The benchmark index here in Europe currently down 0.7%, while Germany's DAX is down about 0.5%, and London's FTSE 100 has fallen more than 1%. The market rout started last week in treasuries amid fears over inflation and another US rate hike. Now, investors really watching this lockstep sell-off in bonds and stocks despite increasingly positive fundamentals forecasters for the global economy also coming out of Europe this morning. If we look at stock specifics, Ryanair dropped more than 3% in Dublin after launching a €750 million share buyback and announcing a 12% jump in third quarter net income. That comes as Europe's biggest low-cost airline seeks to reassure shareholders after caving into a unionisation drive from pilots. Also keep an eye on Tesco today. It's dropped 0.5% here in London. That's after it said Booker boss Charles Wilson will take charge of Tesco's UK and Ireland retail and wholesale operations after the company's merger. Tesco also confirmed that trading had been in line with expectations and that it expects to make £1.57 billion in operating profit before exceptional items in the year to February 24th. Meanwhile, if we take a quick look at European currencies this morning, the euro and sterling are trading relatively flat today, falling less than 4 basis points against the dollar. And in bonds, Germany's 10-year yield has fallen 3 basis points to 0.74%, the largest drop in almost 6 weeks. 10-year gilt yields, meanwhile, falling 1 basis point to 1.57%. Back to you.
All right, Sandra, thanks a lot for bringing all those details with regard to the European markets. Well, switching focus back to Indian markets now. FMCG and IT could be the best places to hide in this volatile market, says Andrew Holland of Avendus Capital in a chat with Bloomberg Quint earlier today. He further states that investors are realigning their strategy with lower return expectations. Listen in.
Global markets are now fearing higher bond yields and what that means, and we're starting to see a lot more volatility in global markets, and that might continue for a little bit longer. I think as regards our budget, whilst fundamentally we see nothing wrong for the economy, the imposition of long-term capital gains tax, I think, was a bit of a shocker. And I think clients and investors now are just kind of realigning to the kind of returns or lower returns they should be expecting from markets going forward. So I think there'll be a lot more volatility in our markets. But fundamentally we're not overly bearish, but we've been expecting this correction. We talked about it many times from a liquidity viewpoint, and maybe this is what the markets needed. But it's I think with the imposition of tax, I still think it's kind of the mid caps and small caps which will probably take the burden of this downfall.
Andrew, the pocket which is doing well is IT. Is this defensive buying, or is this investors getting enthused by the kind of earnings performance that IT companies have shown, not just in this quarter but the last couple of quarters now? And what are you doing within your portfolios, within your advice to your clients? Are you still accumulating, heavily buying into IT?
So there's a couple of points there. First of all, in terms of the performance in terms of earnings, I think you're probably there or thereabouts in terms of the the negativity around earnings. So we moved some time ago from a kind of more bearish stance for the last few years to more neutral, and that's where we continue to be. Of course, in these markets, with the expectation that the dollar at some point will get stronger as there's a flight to safe havens, that the rupee will depreciate. So it's a great place to hide at the moment. I would say the two places to hide in these kind of markets will be FMCG and IT. Usually you put into that pack pharma, but pharma still has its own problems which are ongoing. So of the three sectors, it's IT and FMCG is the best place to hide at the moment.
But what pockets would you have earmarked, Andrew? I'm sure looking at the earnings season, the last 2 or 3 quarters, there will be some pockets which would have been favorites and you would be watching out for. If not now, then when the dust settles, and as you said, it's impossible to time it. But still, the short list of sorts, if you will.
Well, the short list of sectors rather than stocks, continues to be the private banks, which will continue to take market share across the board. So, that's the area that we would look at initially. FMCG and IT, where we're hiding, we'd hide at the moment in terms of the market falls. Will continue to be sectors that we like, and then we'll see we'll see what the damage is and see if we should be looking at NBFCs again in any more kind of serious buying opportunities. And we'll also look at the auto companies and the metal companies.
What about commodity players? What about metals in particular? They too seem to be bearing the brunt of the selling pressure, and this may well be global in nature, not necessarily just local. What do you do with the Vedantas, the Hindalcos, or a clutch of other steel companies as well?
So, I think again, if you look at the actual overall metal prices, they haven't really kind of come under any pressure because the global economy is fine. This is a market correction, not I would say a correction in commodity prices, because either there's oversupply or we're moving down in terms of growth. So, there'll be a very quick bounce back in these sectors. So this is the opportunity, I said, when the dust settles to pick out the ones you want and enter them for the first time or add to holdings. That's what we'll be doing. So it's an opportunity rather than anything that I'm worried about on commodity prices at the moment.
Okay, moving on. Lupin is likely, let's talk about stocks which will come out with numbers tomorrow. Lupin is likely to report a dip of 11% in its third quarterly revenue. However, the domestic business may grow on low demonetization base. Let's go across to Darshan, who's standing by with some more details. Darshan, some more pain?
Yeah, it will be, because some of their key drugs are facing immense competition. So I'll run you first through the broad numbers that we're looking at. First of all, on the top line, we are seeing a degrowth of 11%. On the bottom line, we are seeing a degrowth of 33%, and margins will be down to 21.2% versus 27.1%. So these are the broad numbers that firstly we're looking at. Now, basically, three major geographies is where they focus on: India, US and Japan. Now, for India, because of a low base of demonetization and coming out of GST, we're seeing a growth of anywhere between 10 to 15%. So that is expected to be decent. US is the big problem point because we're seeing a degrowth of 35 to 40 points, and I'll tell you what are the reasons because of that. And finally, Japan, we are seeing a growth of 20 to 25%, and currency also has a role to play because of it. Now, there are two businesses that they work on, formulations and API. Both are expected to see a downtick this time around. Some of the key products, Glumetza, Fortamet, Minastrin, all of them are seeing price erosion as well as competition. Some of their products have gone ex-generic, and that is the reason that they are facing a lot of pressure there. Domestic business will grow back. There will be an overhang of their warning letter that they have on their Goa and Indore plant on their US business, and approvals are not coming in. So the outlook looks rather bleak at this point of time, and remediation costs are definitely there, and that will wane on the EBITDA margins of the company. Now, post the earnings, there'll be a conference call, and we would want to know what their view on the US business is, because despite Dr. Reddy's coming out with a decent set of numbers, it fell significantly because their US outlook was rather weak. So we want to know what Lupin's strategy is there, and obviously what their strategy in terms of their plants is in terms of remediation. So that is broadly what we're looking on for Lupin when they come out with numbers tomorrow.
All right, Darshan, thanks a lot for bringing in all those details. We'll be watching out for those numbers. Well, talking about the pharma space so far, actually the numbers have not been so great, and the reason being the pricing pressure, which still continues to persist in this sector quarter after quarter. In fact, in the last 1 year, we've not seen good set of numbers coming up from this space. But we'll be watching out for Lupin. The counter today closed around the mark of 849, just about a flat closing coming up there ahead of its numbers. But Neeraj, clearly, I guess the focus will now shift to RBI policy this week. And I was just reading an article which states that the run-up this time is different because there's less pressure on MPC to lower interest rates this time around.
Maybe there's pressure on MPC to sound hawkish.
Yes.
But, well, I think it'll be a case of I told you so, right? And to be fair, the RBI has held fort well, and it'll be a vindication of their stance. The question mark only is how hawkish they are sounding in today's, in Wednesday's session about what the quarters ahead or the months ahead could look like. So that will be the big talking point. It's probably a policy wherein the decision is a foregone conclusion. Right. The commentary and the extent of the hawkishness is probably something.
And I think the street has largely factored in that they will be changing their stance from neutral to hawkish. And that wouldn't be a surprise. Like you said, the commentary will be the most important this time around, considering the inflation is moving northwards now and the bond yields are inching higher.
Yeah, it'll be interesting to see their take on the fisc stance of the government, the spending that the government has announced, and what this would mean for the RBI's belief about what this could do to rural inflation as well. But inflation by and large has been circa 4.5, 5. So you don't quite know if that changes dramatically, but it'll be interesting to hear out what the RBI has to say there.
All right, we'll wait for the policy this week, and markets definitely will be taking cues from there. But with that, it's a wrap on this edition of Countdown. Thank you very much for watching the show. It's goodbye from Neeraj and my side. Don't go anywhere. What Did You Miss is coming up next on Bloomberg.
where there is